Welcome to the deep dive. We're doing a deep dive today, something pretty cool.
Yeah.
We're creating like a personalized briefing for you on all the most important financial things that are happening,
Right.
curated just for you.
Yeah.
It's November 4th, 2024.
It is.
And the financial world, well, it's a little iffy right now. It's a mix of cautious optimism, but also some potential uncertainties looming.
Yeah.
So if you're trying to make sense of it all, well, it can be a little overwhelming.
A little bit.
So that's why we're here.
That's right.
We're going to deep dive into the EQAI Morning Briefing podcast from earlier today
Okay.
to try and see how global markets are reacting to all of this.
Yep.
And more importantly, what it all means for you.
That's right. And we'll try and answer the question on everyone's mind.
Okay.
How do we stay ahead of the curve when it seems like the markets are doing the cha-cha?
Okay, so let's rewind a little bit to November 3rd. Most of the major indices were showing decent gains.
Yeah.
The S&P 500 was up slightly. The Dow Jones had a more noticeable jump. Even the Nasdaq, the tech-heavy Nasdaq, got a little boost. Sounds promising, right?
You would think, right? But there's this kind of weird undercurrent of caution despite these gains. It's like everyone's just waiting for the other shoe to drop, you know?
Yeah.
Usually positive market performance means investors are feeling, confident.
Yeah.
But this hesitation we're seeing, it suggests something else is going on.
Okay, so why aren't investors fully embracing the good news? Like, what's causing all of this hesitation?
Well, Doug Ramsey, the investment strategist, he's been warning about a potential market downturn.
Oh.
And, people tend to listen when someone with his track record raises concerns.
Makes sense. He's not someone you just want to ignore.
Yeah.
So what's making Ramsey so nervous?
Well, he's pointing to persistent inflation and slowing global economic growth.
Oh.
It's a classic recipe for a recession, actually.
Yeah.
And normally, these warning signs would send investors running for cover.
Right.
But we're not really seeing that yet. And that's what makes this this moment so interesting and perhaps a little unnerving.
Yeah, it's like we're stuck in a tug of war between this positive market performance, but also these looming what-if scenarios. So is this just a temporary blip, or are we headed for like a major correction? And why should our listener even care about this?
Well, that's the million-dollar question, isn't it?
Yeah.
The answer really depends on your individual financial goals and how much risk you're comfortable with.
Right.
But staying informed about these broader market trends, it can really help you make more informed decisions, regardless of whether you're seasoned investor or, just starting out.
Knowledge is power, especially when the markets feel this unpredictable. All right, let's focus on some specific stories shaping the landscape right now.
Okay.
First up is Boeing.
Yeah.
Their machinists are voting on a new contract proposal backed by the union. And this is the third time since September.
Yes, and the stakes are really high this time around.
Yeah.
These negotiations. They aren't just about Boeing's bottom line. They could actually have ripple effects throughout the entire aerospace industry.
Wow.
And even beyond that.
So it's not just Boeing. It's not just their workers.
Right.
This could actually hit our listeners' wallet, too.
It really could.
What's making these negotiations so tense?
Well, it's a classic labor versus management standoff.
Right.
The machinists are fighting for better wages and benefits, of course, while Boeing is trying to keep costs down in a very, very competitive market.
Yeah.
And remember, Boeing is a global giant, so any disruption to their production could impact multiple industries and economies.
Okay, Boeing negotiations, definitely something to keep an eye on.
For sure.
Next, let's talk oil.
Okay.
Prices have jumped recently, and I know everyone is feeling it at the pump.
Yeah.
What's driving this surge?
Well, OPEC plus MEL, the group of major oil-producing countries, they decided to delay their planned production increase.
Okay.
So that means less oil is entering the market.
Right.
And when supply goes down, prices go up. Basic economics.
Supply and demand.
Classic.
Yeah, classic. So how does this directly affect our listener? Is it all bad news?
Well, it depends.
Okay.
Higher oil prices are good for energy stocks.
Right.
So if you're invested in that sector, you're probably pretty happy right now.
Okay.
On the other hand, it could worsen inflation.
Right.
Which means higher prices for pretty much everything.
Yeah.
And that can put a strain on household budgets.
Yeah.
Think about groceries, gas, even holiday travel, all affected by oil prices.
Right. Okay. So it's potentially good for some investments, but maybe bad for everyday expenses.
Yeah.
Definitely a mixed bag there.
For sure.
Speaking of interconnectedness, how about this? Bitcoin and the U.S. election.
Interesting.
Some Bitcoin enthusiasts seem to be betting on a second Trump presidency.
Really?
Yeah.
It might sound strange at first, but there's actually some logic there. Yeah. Under the current administration, the crypto industry has faced increased regulatory scrutiny, and some believe that a change in leadership could lead to a more favorable environment for cryptocurrencies, which in turn could boost Bitcoin's value.
So it's all about speculation on potential shifts in regulation and how that might impact the crypto market.
Exactly. It's a fascinating illustration of how politics and finance are truly interwoven. Yeah. And even if you don't personally invest in crypto, it's a good reminder that decisions made in Washington can have ripple effects across the markets and even your own investment portfolio.
It's a good reminder that everything is connected.
Yeah.
Speaking of changing landscapes, there's a growing push for 247 stock trading.
Interesting.
Could this be a game changer for individual investors?
Well, it's definitely a trend to watch. Yeah. Imagine being able to trade stocks anytime, anywhere. Yeah. It could really democratize access to the markets, allowing more people to participate. Okay. However, there are potential downsides to consider as well.
Like what? What should our listener be aware of when it comes to this 24/7 trading?
Well, 24/7 trading could lead to increased volatility and thinner liquidity during off-peak hours. Okay. And that translates to higher risk for investors who aren't prepared to navigate those choppy waters.
So more flexibility, but potentially more risk.
Exactly. The key takeaway here is that the financial landscape is constantly changing.
And staying informed about these shifts can help you make better decisions.
Right.
And potentially even capitalize on new opportunities.
Okay.
Think of it like learning a new route to work.
Okay.
It might take some effort at first to learn the shortcuts and avoid the traffic jams.
Right.
But ultimately, it can make your journey a lot smoother and more efficient.
That makes sense.
Yeah.
Now, let's talk about bond yields.
Right.
They dipped recently after a poll in Iowa suggested that the U.S. election might be closer than expected.
Yeah, and it's a classic example of how political uncertainty can really spook the markets.
Yeah.
Investors become more risk-averse, and they flock to assets that are seen as safer.
Okay.
Like U.S. Treasury bonds.
Okay.
And this increased demand drives bond prices up and yields down.
Okay, but why are bonds considered the safe haven during times of uncertainty?
And what does this tell us about how the election might impact the average investor, like our listener?
Think of U.S. Treasury bonds.
Okay.
Like the financial equivalent of Fort Knox.
Okay.
They're backed by the U.S. government. Yeah. They're considered extremely low risk.
Right.
So when uncertainty rises, like during
a tight election.
Yeah, a tight election. Yeah. The demand for these safe bonds, it increases. Okay. And that pushes prices up and yields down. Okay. And this shift can actually have a ripple effect on other investments as the money flows towards those perceived as safer. Right. So while the election drama might seem very distant, it can actually influence the performance of your portfolio.
Politics and finance, always intertwined.
Absolutely.
Now, shifting gears to pharmaceuticals.
All right.
Analyst Pharmaceutics saw its stock jump by 50%.
Wow.
After announcing a merger with Ketamastem, a cell therapy company.
That's huge.
50% jump, that's a huge deal. Yeah. This is a clear sign that that the market is excited about the potential of cell therapy.
Yeah.
So what's driving this merger frenzy in the pharmaceutical world? Well, and what does it mean for the future of medicine and healthcare for, everyday people like our listener?
There are a few things at play here.
Okay.
The pharmaceutical industry is under increasing pressure to innovate.
Right.
Especially for complex diseases. Cell therapy is a rapidly evolving field.
Yeah.
It has huge potential.
Yeah.
And companies like NLS, they're eager to get in on the action.
So they're acquiring like cutting-edge technology and expertise through these mergers. It's like a shortcut.
Exactly.
Okay.
Mergers allow companies to, bolster their research and development capabilities, potentially bringing new treatments to market faster.
Okay.
But this also highlights a bigger trend.
What's that?
The lines between traditional pharmaceuticals and biotech, they're blurring. We're seeing more collaboration and consolidation as companies race to stay ahead of the innovation curve.
So that could mean...
It could mean a future where personalized cell therapies are more readily available.
Wow.
Potentially even cures for diseases we once thought were incurable.
That sounds incredibly promising, but could there be any downsides to this trend? I'm thinking about the potential impact on, like, costs and access to these new treatments.
That's a crucial point.
Yeah.
While these advancements are very exciting, they do raise important questions about affordability and equitable access. As these therapies develop, it's something to watch closely and advocate for, ensuring everyone benefits from medical progress, not just a select few.
That's a great point. It's easy to get caught up in the excitement of new discoveries, but we need to make sure that those benefits reach everyone.
Everyone, exactly.
Not all corporate giants are riding this wave of innovation, though.
Right.
Amazon, for example, has been struggling to break the $200 mark with its stock price.
That's right. And that $200 mark, it's not just a random number. It's a symbolic threshold that reflects investor sentiment. Amazon has been a market darling for years. But investors are now questioning whether its growth can justify its high valuation.
So what's behind this shift? Is this a temporary dip or is something more fundamental changing?
It's likely a combination of factors.
Okay.
Amazon faces headwinds like increased competition, rising costs, and a potential slowdown in consumer spending.
Okay.
But it also signifies a broader trend.
Okay.
Investors are becoming more cautious about tech giants in general.
So even the giants aren't immune to market pressures and shifting investor expectations.
They're not, no.
It's a reminder that that nothing in the market is a guaranteed win.
Exactly. Amazon's situation highlights that no investment is a sure thing. And even the most successful companies need to adapt to changing market dynamics.
Right.
Now, zooming out to the global landscape for a second, we've got OPEC plus influencing oil prices, the U.S. election injecting political uncertainty, and tech giants like Amazon navigating their own challenges.
It's a web of interconnectedness.
It is.
And it's a lot to keep track of. How can our listener make sense of this complexity without, like, getting overwhelmed?
It's a challenge, for sure. But this is where informed decision-making comes in. By understanding the key trends driving the markets, you can start to see the bigger picture and how it might impact your personal finances. Remember, you don't need to be an expert, but staying informed can give you an edge.
Knowledge is power, even in a world of uncertainty.
Absolutely. And don't forget, seeking advice from financial professionals can also help you navigate these complexities.
Great point. We talked about the OPEC Plus decision and its impact on oil prices. But what are the broader implications for, like, the global economy? How does this affect, countries and their economies on a larger scale?
Well, higher oil prices, they can have a ripple effect globally. On the one hand, they benefit oil-producing countries, increasing their revenues. But for countries heavily reliant on imported oil, it's a different story. They face increased costs, potentially leading to inflation and economic strain.
So it's like a global seesaw. With some economies rising while others are pushed down.
Exactly. And this can create imbalances and even geopolitical tensions.
Wow.
The OPEC Plus decision is a reminder that events on the other side of the world can have tangible consequences for individual countries and their economies.
We're all connected.
We are.
So with all these interconnected events and trends swirling around, how can our listener, like, stay informed and make smart decisions in this constantly changing environment? What are some key takeaways from all these stories?
First and foremost, stay informed
Right.
Keep an eye on the news.
Yeah.
Read financial publications. And listen to podcasts like this one that break things down.
Right.
But it's not just about absorbing information.
Okay.
It's about understanding the underlying trends and how they might influence your financial goals.
So it's not just about knowing what's happening. It's about understanding why it's happening.
Exactly.
And what it means for you personally.
You got it.
Okay.
It's about connecting the dots and seeing the bigger picture.
Right.
Now, moving on to some practical steps our listener can take to navigate these uncertain times.
Yeah.
Diversification is a key strategy.
Okay.
Don't put all your eggs in one basket.
So don't bet the farm on a single stock or sector.
Right. Instead, spread your investments across different asset classes to manage risk.
Okay, so manage that risk by diversifying.
Exactly. And don't hesitate to seek advice from financial professionals.
Right.
If you need help developing a personalized investment strategy.
Okay.
Remember, knowledge is power.
Yeah.
Especially when it comes to your finances.
Couldn't agree more.
It's like having a roadmap, for your finances.
Yeah.
Helping you navigate those twists and turns of the market.
We've covered a lot of ground in this deep dive today.
We have.
From market trends and potential recessions to the price of oil and political uncertainty.
It can feel like a lot to process, so let's recap.
Okay.
The key takeaways for our listener.
Yeah. What are the most important points they should take away from this deep dive?
Well, first and foremost, it's crucial to remember that global markets,
yeah,
they're all interconnected.
Right.
What happens in one part of the world can create ripple effects across the entire financial system.
Just like we saw with the OPEC Plus decision.
Right.
Their choice to delay increasing oil production is impacting prices globally and could potentially fuel inflation even here at home.
Exactly. And we also saw how political events like the U.S. election can create volatility in the markets and how those seemingly distant events can have a very real impact on your investment portfolio.
And let's not forget those Boeing negotiations.
Right.
They highlight how labor issues, even in a specific industry, can send shockwaves throughout the economy.
For sure.
It's a good reminder to think about those supply chains and how they connect everything.
Absolutely. We also discussed how technological advancements, like the push for 247 stock trading, are changing the way we invest. It's exciting, but it also presents some new challenges. Right? It's like we're all adapting to a new set of rules, trying to keep up with this rapid pace of innovation.
It feels like a constant game of adaptation in the financial world, doesn't it?
It really does.
Investors need to stay informed and be ready to adjust their strategies as the landscape changes.
That's a great way to put it. And on that note, let's leave our listener with a final thought-provoking question.
Okay.
In this world of evolving financial trends and potential risks, what's one concrete step they can take this week to stay ahead of the curve and make smart decisions?
That's a great challenge.
Yeah.
It's like a little homework assignment.
Yeah.
Encourage your listener to take what we discussed today and put it into action.
Knowledge without action won't get you very far. So take that next step, even a small one.
Yeah.
It could make a big difference.
Thanks for joining us on this deep dive.
Yeah, thanks for listening.
Into the financial world. We hope you feel empowered to not just understand the news, but to see the bigger picture.
Yeah.
And its potential impact on your life.
Keep exploring.
Yeah.
Stay curious and never stop learning.
Until next time, happy investing.